Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my partner on both YouTube as well as Investor TV here, Don Durrett, the founder of goldstockdata.com. And Don, I understand you have a new edition of your book out.
Yeah, 10th edition is out, guys. Definitely the best version.
What's the
Get some nice.
title?
It's the same title. Well, it's just a 10th edition. Yeah, it's How to Invest in Gold and Silver. It's a complete guide with a focus on mining stocks. So half of the book is mining stocks, how to analyze and value mining stocks. And it's 300 pages long, so it's like a textbook.
Great. We just posted our 2024 numbers at Feneck Consulting. If you guys want to check that out, it's fenneckconsulting.com/performance. We were really happy to beat the GDX by almost 16% last year. We feel we're going to have even a better year this year as we're more of a bull market manager than anything. So we're just seeing a lot of opportunity. Don and I were just talking about the disconnect between gold and gold stocks here. We're going to save that for just a little bit from now, but we're going to jump into macro first. So Don, why don't we kick it off with your take on what's happening on the macro side?
Well, we had a Fed meeting yesterday, and everybody expected them to pivot into a more hawkish stance, since the expectation was, kind of over the top, there's not much of a reaction there. But one thing is this disconnect between the Fed and Trump. So Trump wants lower interest rates and he wants a lower dollar, and Powell wants to fight inflation. So they're basically at odds with each other. I don't see that resolving. I think it's going to get worse and worse. I think Trump will he'll be a little patient. As long as the stock market is doing well, he'll be somewhat patient, but he still has that problem with the budget because he needs to get interest rates down because we're at a $1 trillion interest annually and we're borrowing money at in the short end over 4%, and the long end over 4%, close to 5%. So it's a big problem for them. Inflation, the reason why Powell didn't cut rates is because inflation is being, sticky here. He wants to get it down to 2%, and it's more like 3%. Now, they're saying it's 3%, but I just got my car insurance renewal, and there's no way that anybody's their home, auto, or health insurance is a 3%, right? Good luck getting a 3%. Right. So services inflation is higher than that. Now we are seeing oil prices, which are helping inflation. They're at $72 oil prices right now. That's helping. But on the whole, and I don't think food prices have really went kind of nuts. They've been fairly stable, say the last 6 months. But services inflation is definitely a problem. The overall inflation rate, I think, is over 3%. And so Powell wants to fight that. And so you have that's a problem. And then the high dollar is at 108. It creeped back to 108 today. That's a problem. That high dollar puts a lot of pressure on the bond market because it makes it more expensive for foreigners to buy our debt. And so Trump wants to get the dollar down and he wants to get the interest rates down. And that's not going to be easy. And here's an interesting thing I read recently, and I kind of rolled my eyes that they actually were thinking of doing this. But the head of Trump's economic advisors group, there's a group, the economic advisors, right? The head guy said that we can lower the dollar by withholding our interest payments on bonds, but we're only going to do this to foreigners. And then he said that we can also charge a fee for them holding our bonds. It's like, what? You're actually thinking of doing these things?
Right.
Basically going to create fewer buyers. And if you get fewer buyers, interest rates will actually go higher. It'll like backfire. It's like, it's like desperation. The thing that's weird about this is that he would actually say that this is kind of what they will do to lower the dollar, is that they're supposed to be free market guys. This isn't free market. It's a contract. It's like, I bought your bonds, you pay me interest. And now you're going to rug pull me and change the rules. That's something the Democrats are supposed to do, not the Republicans. I don't think they'll do it. I thought it was fascinating that he would even bring it up, that that was something they were thinking of doing. The other big news item this week was the Fed workforce, which is the largest workforce by far. I mean, it's over 5 million people. I think it's closer to 7. And Trump said that any federal worker can retire or quit. They don't have to retire. They can just, they leave, quit. He'll give them a check for 8 months severance, and he'll pay all of their benefits for the next 8 months. So we'll give you basically you can take a sabbatical for 8 months. We'll pay your way, and then you can go try to find another job. But a lot of people are going to retire early on that 8 months. I wouldn't be surprised if some people are saying 10% of the workforce. I don't think it'd be 10%. 10% would be like 700,000. I think it'd be closer to 400, 500,000. But it's a big chunk of people. And if a majority of those are actually retiring, then that's kind of a rug pull on consumer spending. Because once you retire, you don't spend as much money. So that's interesting. The other big news item was they're talking about a gold shortage in London on the LBMA, that they said that right now, if you try to take delivery in the LBMA, it's 4 to 8 week wait. And it's supposed to be 2 days. So it went from 2 days to 4 to 8 weeks, which is,
I've heard that with silver as well. In certain parts of the world, it's a couple
even
weeks.
longer.
Yep.
Yeah.
And I'm talking to like a big, I don't want to tell the audience who it is, but it's a top 5 player in the US. This is a credible source telling me that someone wanted delivery, like one of their clients, and it was 4 weeks. And the client was super, you know what, not happy.
Yeah.
So, it's like if people would spend more attention, pay more attention to the things that you and I pay attention to every day, I think gold and silver would be a lot higher, and the related investments like the equities you and I invest in will be a much higher as well. I mean, there's just tremendous value still in the market here.
I believe Scottsdale Mint said there, which is
Wow.
kind of, pretty crazy. That's what they're
crazy.
saying. So now, what is the 3 month delay? I mean, you guys can go and do a research on it and see exactly what they're talking about. But there's definitely some significant delays here for gold and silver. Some interesting dynamics going on, and there's this trend we've had this trend towards gold that started last March, and it has not let up. You got the central bank buying, you have the Asian buying, you have the Middle Eastern buying. The only people that haven't been buying is the West, is Europe and the U.S. that we haven't really gotten on the bandwagon yet, but we will at a certain point. We will. Yeah. One last news item I'll mention. Well, I'm going to mention 2 news items. Is that the job hires and the job quits have all started trending in a negative fashion. So the people that are hired, the percentage of people who hire is actually lower now than it's been like in 10 years. So the hiring is slowed, which is not a sign of an economy picking up speed. But the other one, the correlating data point, is the quits. So people quit their job when it's a loose job market because they know they can find another one. And they quit their job when they're switching. So when people are hiring, you get a lot of job quits because people are going to switch jobs, because you can get a bigger raise if you switch companies. That's the nature of how it works. I mean, you stay with your company, you get 3, 4, 5%. That's it. But if you switch companies, you can get 6, 10, 15% raise. And so you see, but when the job quits start shrinking, which is what's happening right now, that shows you that it's hard to switch companies, that people aren't hiring, and that coincides with the hiring being down. So I think the economy is slowing now. We have Kohl's laying off 10% of their workforce. I think that's a tell. I think that February, I'm very bullish. I think everything is green in February. Gold's going up, stock markets are going up, we're green. But I think but Trump's going to start putting the tariffs in play here in February. And so March, I think, is when all of this, kind of this negative data that I'm throwing at you, I think the tariffs are not going to be positive. I think there's going to be reaction to what Trump does with these tariffs. I think there's going to be backlash. especially out of Canada. Canada has some significant products that we kind of depend on, especially like housing. I mean, they put a 50% tariff on lumber. The housing industry is kind of screwed. But
which has been a pillar of both economies for years in a row now.
yeah, they have leverage. So I'll let you talk and then I'll talk some more.
Okay. So, yeah, I agree with a lot of that stuff and great observations on those recent news items. I think Trump's off to a very fast start here, not unexpected by people like us that talk about this stuff for a living. But I think the average investor is pretty shocked about how quickly things are moving and how much news flow is being put out there. I think, what I said on Kitco yesterday was if he's coming after Mexico and Canada February 1st, what do you think he's going to do to China over 4 years? Because it is going to be crazy, I think, in terms of what could happen between, our country and China in terms of a commodities war, not necessarily bullets and missiles. It's more like, hey, all of these critical minerals are owned by China. You and I talked about China's dominance and things like the U.S. bond market and things like that. But let's talk about critical minerals. They produced over 85% of tungsten last year. They produced a huge amount of manganese last year, a huge amount of antimony. When you go down this list, all of these things are critical to the U.S. Yet we're producing next to nothing in these different commodities. That's why I think it's going to be a really interesting year for critical mineral stocks. We're heavily invested, in those type of names because of that. A lot of them don't have analyst coverage. They're just completely flying under the radar with very tight share structures, some of them. So, it's like checking a lot of boxes for us. And we produced almost a 26% return last year. A lot of that came from, having a 1, 2, 3% position in some of these names that were very additive to our performance. The ones we currently hold are Guardian Metal Resources, GMTLF in the States, and Demesny Resources just had a name change to American Tungsten. That one is DEMRF. And we own a little bit of Fireweed. They got a $35 million grant last month, FWEDF. So, we basically are putting our money where our mouth is and saying this kind of rhetoric from Trump is just the beginning. I think it's clear that he is going to go after China and that this world is becoming more protectionist by the week. So moving on, let's say, I did look at the Fed watch tool done before our interview. And interestingly, when you look at the next couple of meetings, there isn't a cut of even 25 basis points factored in by more than a 40% probability until the June meeting. So, the Fed watch tool is still showing like a 2 kind of cut scenario. They were just at 4 cuts early November, right? So what do you think is going to play out there?
I think there will end up being 2 cuts and an emergency cut because I think we're going into recession. I think that, I've mentioned these negative data points, and Trump is kind of behind the 8 ball here on what he can do. He's really trapped with the Fed. I think the Fed right now is in a reactionary mode. They really don't know what to do. Do we cut rates and then let inflation go up and make sure that the economy doesn't go into recession, or do we have confidence that the economy is okay? We don't have to lower rates. We can just keep fighting inflation. They're trying to follow the data here, but I think they're being reactionary, basically picking, kind of what the worst case is. But the bottom line is I don't see them being able to prevent a recession. That's the key here.
Okay.
Can Trump or the Fed prevent a recession? And my gut feeling is no. And I'm going to give you a couple more data points because it's been a busy week on news. NVIDIA crashed on Sunday night on the open and was down. I mean, they traded at 140, 145 going into the week going in, and then they traded about 123 yesterday. They bounced a little bit. They trade as low as I think 117. So 140 to 117. They lost over $500 billion in the market cap on trading on Monday. Well, NVIDIA, I mean, come on, the Mag 7 have been holding this whole market up. Last year, nearly 50% of all the profits came from those 7 companies. And NVIDIA was the leader. And NVIDIA got rug pulled by a Chinese company called DeepSeek, who basically threw out this new engine and said, okay, here you guys go. And they call them models. The new model says, okay, use, and everybody started looking at it, I'm not looking at it, but using it, and it worked. Everybody's going, what the heck's going on here? This thing works. How can it work? How did that happen? And it kind of
Hmm.
rug pulled a lot of people. But the bottom line is this, is that if NVIDIA can't get going again, in other words, okay, so if we look at its all-time high, if NVIDIA starts struggling a bit, now they always report last, so we're like a month away from when they report. But if their forward guidance falls off a cliff here, that could kind of end this bull market. I mean, you're also seeing some other companies that are having some issues. Apple and Microsoft are two of them because Microsoft is trading at a pretty high valuation, like 10 times sales or something, when you're supposed to like 3 times sales. They're way overvalued versus their historical numbers from AI. But so there's some issues here with the Mag 7. We'll see how it goes. The other data points that I think are also somewhat negative. I think the DeepSeek data overall is negative to the market because NVIDIA is kind of a pillar, right? And if a pillar is getting rug pulled, it's not good. Okay, so the other one is the auto industry. So the auto industry, their inventory, their new car inventory is starting to expand because people can't afford new cars. And
Right.
so that's becoming a problem. The other problem, the correlating data point is they're losing their profitability on used cars is dropping because people can't afford new
Absolutely.
used. So those two things are hurting them. So they're losing, basically can't sell new cars, and their used cars, they're losing profitability because nobody will pay for them, and so they're dropping their prices to move them. So the auto industry is having trouble. Now housing is probably the only, I think only is a strong word, but one of the few areas where people can point to and see relative strength. Now, it's not strong overall, but the one thing that's happening is the valuation of people's homes is still going up, which is amazing because they're overvalued, but they're still going up. So my point is this, is that if you own a house just about anywhere, you're happy because your equity is bit. You got a bunch of equity. You got a lot of value in your house. And then you have a lot of value on Wall Street. So the upper 25%, especially people that own their homes, the upper 25% of Americans economically are doing fairly well. They're doing fairly well, and they have a lot of wealth, the wealth effect. Like my house is worth $1 million and I own it.
Yeah.
Right. And then I got investments in stock market, another $1 million. I'm net worth $2 million. Right. But it's
Right.
an illusion, right? It's an illusion because that could all
It's an
go,
illusion.
that could
Yeah.
all
Well,
drop by 50% in a hurry.
let's talk about that for a second because you're referencing NVIDIA's price action Sunday night into Monday, January 27th. That ticker is NVDA for those of you guys that don't know that. NVIDIA lost, I think, 17 to 19% that day, maybe 20. I'd have to double check, but it was a huge drop in one day, which again, many of the tech bulls say, oh, this could never happen. Well, it just happened. So there you go with that. We have been saying on this show for a couple of years now that algorithmic buying and selling is very real and has to be respected. And if you don't believe me, just look at the price action on Nvidia on Monday. You can't even keep up. I was looking at it. It was a blur. The number was a blur. Like it was, things were happening so fast, able to be tracked by someone who's a professional, right? And so it's like if that's part of the S&P and part of the Mag 7 that you talked about, there is a lot of risk out there, right? You're mentioning Microsoft being overvalued. Apple, we always know, January is an important month for them. We'll see, January, February timeframe. But there's also this idea of paper wealth that you just brought up with real estate. I mean, here in Arizona was a top 3 market for the last 3 years in a row in the U.S. Okay, for actual percentage growth of your residential home. That has come to a screeching halt because I'm actually looking for a home right now. There's a lot of homes out there, 90 days on the market, 120 days on the market. That did not exist at all a year ago. You are seeing things move much, much more quickly. So what that indicates to me is that people are just putting down their foot and saying, I'm not spending this. Like, rents have come down, but also the average price per home, at least in this market, has come down pretty significantly. I'd say 15 to 20% year over year. So, when you start wondering about how do I get out of this house cleanly, that's why I sold all of my homes, within the last 2 years, except the little one that I live in now, is that I want to basically hunker down, take those gains, put them into things like we're about to talk about, gold stocks, where I have an advantage over the average person because I talk to CEOs on a regular basis like you do, and then let other people fight on the real estate side for 90 to 120 days plus to sell their home at a potentially a loss. I mean, a lot of people bought in this market in the last 3 years and they're not making any money. I mean, I think we're seeing a topping effect is what I'm saying in parts of the US market in terms of real estate. And so that's another thing to worry about, which may be solved by lower rates, yes, but we'll see, right? Because as I just said, if the next cut is June, we're in January. I mean, this is going to take a while for people to see lower mortgage rates and generate more buying.
Yeah, exactly. So it's amazing. I mean, gold today is up $37 spot. And SIL is up 5%, GDX is up 4%. We had some big moves today. We haven't even talked about gold. Gold spot today, we're talking on Thursday the 30th. Spot was closed at 2797, right below 2800, and futures above 2800. What's amazing, it was at 2790 with 30 minutes to go and actually jumped $7 in the last 30 minutes, which was interesting. You usually don't see that.
You usually don't.
Gold
Well,
is
we're going into month end tomorrow too. I mean, that's an important like thing to mention, right? Because we may have a 28 plate for the first time ever.
Yeah, absolutely. So the miners were up pretty good. They were up 13 points today. The HUI was up to 317. It was at 355 in October, I think October. And then we had it, it ripped up there, had a run. I actually think this is another fake out run. So we went to 350 and then went all the way down to, I don't know if we got in the 280s or not. We definitely got the 290s. I think we got in the 280s.
Yes.
So that was a pretty big up and down, move. And so people that were buying, HUI above 320, they kind of got rug pulled. And so I actually think that that's what's happening again here. Now, most of the charts look great. Most of the TA guys are like, Don, you're nuts. Everything's fine. We're breaking out. But in order to break out, in my opinion, you have to get gold above 3,000, which I think has a very good chance of happening in the next 6 weeks. So you're going to check that. I think you'll check that box. However, the other two boxes aren't going to be as easy to check. And those are the HUI's got to get above its recent cycle high, which is 355 in the HUI. Now, I do think it'll probably get in the 340s. It might get close. We'll see if it checks the box. The other one that has to check the box is silver. And silver's at 31, 31.44. It has to go all the way to 35. So that one's probably going to have the hardest time checking the box. And if all three of them don't check the box, then kind of look out below. And that's what I'm saying I think is going to happen. I think this is it's not a breakout. Because you need all three to get a breakout. And the reason why I'm bearish here in the near term, in other words, I see that I think this is a rug pull fake out. The reason why is because I study history, and the gold silver miners have only had two big runs, the 1970s and the 2000s. And both of those decades had the same thing in common, big economic problems. So the 80s and 90s, we didn't have any economic problems. And gold and the miners did absolutely terrible. Then from 2011 until now, we haven't had any economic problems. The gold miners did terrible. So in order for the gold and silver miners to do well, you have to have economic problems. And so until those problems, we don't have them yet. Until those problems show their face, I'm going to basically say, look out for the rug pull. So that's what I'm saying. I want to be wrong. I'd love for gold. I'd love for the bottom to be in for gold and silver right now in the miners. The bottom's in
Yep.
and we trade up. That would be
Yep.
fantastic. But I don't see that. What I see coming is that the rug pull is coming on in the S&P, and I mentioned all these negative data points today. And so, and what's I think going to happen is you're going to get exhaustion. So we're going to get the S&P up to, I think we're going to see 6,300 in February and maybe 6,400 in early March, maybe 6,500, somewhere in there. But I don't think we're going to get to 6,500. And the reason why is you're going to get exhaustion. So you're going to get, once you get to 6,300, the market is basically so overvalued that it can't go any higher. And it hits exhaustion and then whoop, falls down. So what I think
Right.
is going to happen is that you're going to get exhaustion. And then simultaneous to that, all these negative data points that I'm talking about are all going to just kind of reveal themselves. People are going to start talking about the negatives instead of the positives. And I think the trigger here, I could be totally wrong. I think the trigger here is going to be tariffs, trade wars.
Mhm.
I think that's going to be the trigger. And I think the omen is Nvidia. Nvidia is the omen, and trade war is the trigger. And by the time we get to end of March, I think everything's going to be lower across the board.
Well, as I have talked about pretty much every month we talk, I think I have slightly higher price points for things like gold and silver, and I use GDX instead of the HUI. But when you look at, I was just on Kitco yesterday talking about 52-week highs that seem to be imminent, and I gave a few examples. One was Agnico AEM that did break out today and made a higher high, all time, not an all time high, but a multi-year high here. I have to look at the 10 or 20-year chart to be sure that it is an all time high, but it's definitely a multi-year high. Closed at 94, I believe, plus today. Another one that I mentioned was Mandalay Resources, MNDJF. They're a gold antimony play. They have deposits in Australia and Sweden. That stock I said at $3 when I was interviewed, has the ability to break above that 340 a share. And when you look at a 10-year chart on Mandalay Resources, they just have a lot of upside above 340. There's hardly any resistance at all. And the last one was a small name I gave them, which was First Nordic MCF, which has already identified 3 million ounces of gold, and they're drilling aggressively right now at their largest project and their second project. So, I think when you look across the board, there's a large cap, a mid tier, and a small cap, micro cap, if you will, that are all making 52-week highs at least, if not multi-year highs. And I think when you look at their RSIs, there's still a lot of room to run on some of these names. So to your point, yeah, we could see a sell-off again, but I think the worst is behind us. I think that's important to say because November 5th to December 31st was awful. I mean, I only lost one client, but I thought I was going to lose about 20 just because people were getting frustrated, right? We had a good run up in September, October, and then the Trump inauguration was like a risk on moment, right? Tech moved, Bitcoin and all a lot of the coins moved. I mean, a lot of people were throwing money at things like it was a casino. And I think Monday's sell off, January 27th, tempered that a bit.
Okay. So it's January, and one of the things I like to do in January is you put out a list of stocks. A lot of years I'll do top silver, top gold. So this
Mm-hmm.
year I did YouTube videos. So I did a top 25 silver video and a top 35 gold video. And then I did an update to my optionality list. So there's 3 YouTube videos that are easy to find. Just go to YouTube and put in Don Durrett. You'll find my channel and find those videos. Now, one follow-up on those videos I want to say is that I also posted them on Substack, but on Substack, I posted updates. So what happens is I'll do a video and I'll forget a few names. So and so that's what happened. So all the names that I missed, you can find those on Substack, and you can find them for free. You don't have to pay on Substack. You can join my channel for free. And a lot of these, whenever I do a YouTube video, I post it for free on Substack. Now John's been mentioning a few names, and I wanted to mention earlier. John alluded to, that we were going to talk a little bit about the disconnect between the gold price and the gold miners. Because what's happening is the multiples have been really shrinking because their free cash flow has been blowing out and they haven't been keeping up. And I mentioned this before with Newmont trading at 9. I didn't check it today. I'll check it. It might be it bounced to a 10 today, but I say it's trading at a half its value. I mean, company as strong as Newmont should be trading at least a 15, in my opinion. And I think it'll go to a 25 when we get a bull market. So, I mean, I have this list of companies I call the Aussie Eight, and five of them right now are trading with a multiple of 4 to 5, which is just kind of crazy. You have Ramelius Resources, which is, no debt, generating. I mean, they're all generating a lot of free cash flow, and they're trading at these 4 and 5 multiples. Vault Minerals, Bellevue Gold, West Gold, Regis Resources. I mean, it's kind of amazing that quality companies in Australia are getting traded at a multiple of 4 to 5. Usually traded high multiples, I don't want to buy them. They usually trade at 10, 12s, and 15s. It's like that's what they normally trade at, and they're trading like half off. And the reason why they're trading at half off is nobody believes that the gold price is going to stay at these values. So nobody's buying these stocks. Today, Endeavor Mining came out with their fourth quarter numbers and then their guidance for 2025. The guidance for 2025 is 1.2 million ounce production with an AISC of 1250. And they're a major, well, of course they are. They're mining 1 million ounces of gold. But here's the kicker. I mean, at current gold prices, they're going to generate $1.4 billion in free cash flow. It's a lot of cash. And they're trading at a 3.5 multiple at current gold prices and current cost. But Barrick and Newmont, the reason why they trade at 1250 AISC is because they're mining in West Africa, which is generally always open pit mining. It's basically low cost mining. So they have an AISC that's much lower than Barrick or Newmont,
Mm-hmm.
but they're trading at a 3.5 multiple. Part of this is in Africa. People don't want to own it, but at a certain point, there's no way that this multiple is going to stay at 3.5. It's going to go to 10, 8 to 10. So it's trading, half its value. My point is that all these stocks are trading literally at half their valuations. And I think they're all going to double in value once the bull market kicks in. So you're going to get a two-pronged jump in their value. So when the breakout finally starts, when we finally go into a bull market, and that's again 3,000 gold, 35 silver, 350 HUI. So once all three of those hit, these companies their multiple expansion is just going to double overnight. So the market would double. And then on top of that double, so that's 100% move. And then on top of that, you get the free cash flow expansion, the value of the free cash flow. So these stocks are all these quality names that are super undervalued. They're going to go up 125, 150% when the HUI just goes up 10%, which is it's gonna kind of rip your face off the kind of moves these stocks are going to make in a hurry. It's like, what just happened?
Mm-hmm.
They're gonna move once that multiple expansion kicks in. They're going to move very quick. Now it might take until we get to 375 on the HUI. That's about a 20% move. You get a 20% move, and these stocks are going to go up 100 to 125%, depending on how beat up they are, how cheap invest fast, but many of them will.
Yeah. Don't you think, just a final thought here, Don, because we have to run, don't you think that some of the juniors you and I have talked about in the past that just have complete disconnects with even where they were priced in the last rally, like 2011, 12, like you and I have talked about 1911 gold, AUMBF. I mean, that thing is still valued. I just checked at the close under $20 million. But in the previous rally, talking 13 years ago, it was valued at a billion. So we're not going to get to a billion necessarily, but we're at 20 million. I mean, this is like, I think what Don is saying is that, yeah, the large cap stuff's going to move, but some of these little guys could move like hundreds of percent if gold does what it's supposed to do, if silver does what it's supposed to do. And, the HUI has to play ball too.
Absolutely. And that's definitely a name that was on my optionality list. There's some developers out there right now that just have unbelievable leverage. You have, I mean, the Mormons, which are my top 8 silver names, they average a 10 bagger, which those are high quality names. Today on my Twitter gold community, I posted my big winners today, and I put little green arrows on all the Mormons. So all the Mormons were on the list except for Fresnillo and Aya, but Fresnillo wasn't that low. I don't know why people don't like Aya. But Aya's not really getting a lot of love. I think eventually it will. But the other 7 were all 5% plus today, and so these quality names are all, like I said, I think they're going to average a 10 bagger when this is done, when this bull market's done. But they're like easy 5 baggers from my perspective, my belief strategy. I believe, they're going to be easy 5 baggers. So if these quality producers are 5 plus baggers, I actually have Newmont had it as a 4 bagger. It probably went up a little bit. Maybe it's down to 3.5 bagger. But I had Newmont and Barrick as 4 baggers recently when they were trading at 37. And I need to take a look at that. But if these quality producers have those kind of upside, yeah, some of these juniors are, 10, 20, 30 baggers. It's kind of crazy. I bought Lahontan yesterday at 2 cents, and
Yeah.
it's trading. It's got a market cap of $5 million, and they have 2 million ounces of gold in Nevada with a PEA, with an economic PEA.
It's crazy, right? It's just you
crazy
can go
land.
down a list of these things.
If it's not a 5 bagger, I mean, I just had to buy it, my optionality list, and I didn't own it. So it's like, I got to buy this thing, like 2 cents. It's like, this is crazy land. When does this stock finally get some love and get some action? But 1911, Lahontan, there's many stocks that are like that right now that are just have just some massive leverage. And the key to it all, of course, is gold and silver prices. That's the reason why I'm in this game, because there's very few sectors you can invest in that are basically lopsidedly lean towards the price of what they produce. In other words, they don't depend on consumer taste. They have no competitors. That's the beauty of gold and silver. Most industries, most companies, I have an MBA, and I went, and I understand business. The biggest problem with starting a business is your competitors. That's the biggest problem you got to deal with, is your competitors, because they're all trying to do the same thing as you. They're all fighting over the same customers. Gold and silver is super unique. They do not compete against each other. They don't. They do not compete against each other. All they do is mine the gold in the ground and sell it for whoever wants to buy it. I mean, it's basically supply and demand kind of thing. There's no competition. Tell me another industry that's that way. So it's a very unique. So all they need is higher gold and silver prices, and they make money. But that said, it's one of the most difficult industries, because they are dependent on gold and silver prices, and unless gold and silver, so there's nothing they can do really. If gold and silver prices aren't higher than their cost, they're kind of screwed. There's right.
Well, yeah. In fairness, though, there's some that just make bad decisions, like Alexco. There was always that water permitting overhang on that stock, and then they should have raised more money at 3, more money at 2, and then they sell for pennies on the dollar to one of your Mormons, Hecla, right? And,
yeah, but if silver prices would have been $50, Alexco would have been fine. So it was
true.
the silver.
True. It's timing. Timing matters. Where are you in a cycle?
But I don't care how good your property is. I don't care how good it is. You could have the best property in the world and be generating beautiful margins. It doesn't matter. It really comes down to, is the gold price high enough to get investors interested? It always comes down to that.
I think we're getting there. I think
we do. Yes, and it's rare. It doesn't happen very often. And
Right.
when it happens, it's a beautiful thing. I mean, you just make
Mhm.
a lot of money in a very short period of time. And so,
Right. Yeah. I think we're approaching that time this year. So some notes here, rewind our presentation. We have a number of educational things on the web for you as investors. We want to, have you go to our websites, goldstockdata.com for Don, mine is feneckconsulting.com. We have services there that we provide to the public for very nominal fees. And we'd love to have you learn more about what we're doing this year. With that, Don, thanks a lot. And we'll do this again in a couple of weeks. And for those of you that tuned in, we appreciate it. I will be co-leading 2 conferences this year in the first half of the year in Florida. Don was a speaker there last year at the Four Seasons in Fort Lauderdale, Florida. That's going to be May 11th through the 13th. And then right after that, Atlanta Buckhead at the former Ritz-Carlton there, May 14th through the 16th. Stay tuned for more on that in the show notes. And if there's anything we can do to help you along the way, let us know. Thanks, everyone.
thanks.